Good morning. Good morning. This is Julie, and it is Thursday, December 1st. And I thought I would go over some easy ways to tell if you're in a trending condition so that you can take advantage of taking pullbacks in the market. The first thing that you want to do is look at a higher time frame. And I use my volatility bands. I have two different levels. And the second level, I want to hold the trend. And my members get my volatility band settings as well as my Bloodhound templates to give them the trend entries. When you're in a flat volatility going down and upper volatility, you don't necessarily want to short into that. You don't want to short into resistance. Most people will say that that's a buy zone, and people will be trying to hit these white candles. I'll get more into that in just a minute and show you my methodology. But definitely I have a Keltner channel on here also that helps me. This is a 200 EMA. And basically that's it. My volatility bands and Keltner. And of course, if you want your pivot points, your VWAP, your market profile, you can, put all of those things up for additional support resistance. So my trading strategy really is I want to make sure that I'm in a trending condition. Now we're trending, and you need to find on your lower time frame when that trending condition is going to be operative. So I use my Unirinco bars. My larger bar, because of the extra volatility, I have my standard 30 range. I have a 10, 20, 98 with 10 and 20 is 30. So that's 30 ticks for the top and the bottom. And if you get a full reversal, it's about 45 ticks. Sometimes this second bar does not go 30 ticks. But it's more than 30 ticks for a full reversal. So just be aware of that. What I like to do is make sure that my higher time frame is also trending and not going sideways. So here you see in the Globex session from yesterday, they had a very nice trend on that OPEC news, and then we went into our sideways chop starting into the regular trading hour session, pre-market regular trading hour, and then it just went sideways and up. So basically where to buy are on all these dips. So if you just wait for the retracement, you buy on your first candle up and try to hold the prior pivot. That's your stop. And if you get shaken out, you just get back in on a change of trend. On the higher time frame. And I use a smaller time frame to get long. I don't use my 30. I should have used my 30 tickers yesterday, but I was trading a smaller time frame. What I ordinarily do is once I decide that there is higher highs and higher lows printing, that's what you require for an uptrend, then I'll wait. I'll take the trend and then either get my profit target, wait for a reversal and get back in. But I want to definitely be trading in the direction of the trend once that's resumed. And then I can take that trade on the smaller time frame. And I'll show you that in just a second. Right now, we're live in the market. We came up to the prior high zone and we got the selling distribution. I have a volume ladder, and this shows the volume on the bid ask on the diagonal, and you can tell I have my Bloodhound template attached to it, so I can tell what the market is doing. Over here on the right is cumulative delta, and this is live in the market. This is the cumulative delta on the bid-ask difference. I have my own algorithm ratio that highlights the volume, so you can see it, $50.16. We had the lowest volume, 710, and started getting sell signals right here. The highest volume is here at 45.28, contracts traded at 49.90. The green shows the difference on that bid-ask on a ratio I have for my algorithm that highlights this. So I'm not looking at the number, I'm looking at the color. I do look at the number if it is in the thousands versus the low number, because that's important. But so right now it's climbing back up. The key to this is also to make sure that you're getting these big green numbers printing, because that's showing you a ratio of the difference between the bid and the ask, and that means that buyers are coming into the market. It doesn't mean, like right here, a seller can't come in at some level and throw it back down. These numbers change all the time, but it can give you a clue, especially when you're trading with delta. This is regular delta down here, cumulative delta, the difference between the bid and the ask. And then use your trading system weekly, daily, 60-15. We want to trade long. And here's the key on the lower time frame. Here are your entries. So you have a higher time frame, you know your direction, so you can be sitting here and my lower time frame matches my volume ladder. And here are my entries. And I have various methodologies. This is one of the templates that I'm trading with. Let me put the template on that I'm normally trade with. Just a moment. And I'll show you the one that is used most of the time. Uh-oh. Almost lost the program. There it goes. And so here are my signals. And this is what I want to do is I want to wait for the signal and not get in when I think the signal's going to fire, because sometimes I think the signal's going to fire and I get long because it's a support or resistance zone, or so I thought, and that's where we're taught to buy. We buy at support and we sell at resistance, our accumulation and distribution areas. So I wait for really my higher time frame, and even though I'm not picking bottoms and tops, I'm getting the meat of the move in a trend. So here is your meat, and this is the area that I'm interested in. So that's from 308 to 537 this morning. And so each one of these, you can see, were fabulous trades. And you can trail your lower volatility band on this small Unirinco bar. Momentum above zero, you've got your volatility, and you've got your pullbacks. So you can scalp, trend trade, do whatever, but that right there, my friends, is how to trade a trend. So let me go over that again. You spot on the 30-minute a trending condition. This is for day trading. 30-minute or 5-minute. You get your Unirinco, make sure it's 30 range in the direction of that trend condition. Wait for the bar to turn around. And then when that bar has turned around and you want the meat, you go inside the market at that time and you take your trades. So you really don't even need the volume ladder. I just like to have it because you can see when the volume is coming back in the market, like right here, 29 printed. This may come back down because it's not a zero. My indicators are pretty good. When you get a change of commitment of traders, the COT number will flip the bar. It's usually a zero on top or bottom on those COT flips. If it's not a zero, that means there's something left to be done in that market, and the market's going to come back and clean that candle up to give a zero. I don't know why this works or how it works, but trust me, see the zeros? So like right here, the 67.44, that's probably where the market's going to be coming down to clear that up. I might be saying this wrong, but and I might be hallucinating or, you know, recognizing a pattern that doesn't exist, but so this is the methodology. It's super simple. When there is a trending condition, that's where we want to come in and take our money, and it really is as simple as 1, 2, 3. The problem we have when we're trading huge volatility is getting all these moving parts at one time, and we get lost. Like yesterday, you know that you're in an uptrending condition, but the market was not cooperating right here. We had a beautiful pattern on Globex. They got all the money, and then as soon as it gets pre-market and RTH session, there's no more trending condition. This is a different filter I have, but it shows trend pretty well. So you have to wait for that trending condition to come back, and that's exactly when it started going up to hit that high yesterday, and then it falls back, and then now we're on another trending condition. So stay with your trends. Your trend is your friend when it exists. That's why finding or curve fitting a strategy or back testing a strategy does not work. Strategies like trend trading strategies only work when there's a trend. So make sure you have higher highs and higher lows, and that's very easy just to see on your chart. Your lows are higher and your highs are higher. Higher highs and higher lows. Once you start breaking that pattern, say this failed here and came back down, you're no longer in an uptrending condition until this pivot high gets knocked out again. You're in a range. So it goes from trend to range, or it can just go flip from long trend to short trend also. but usually trend to range to trend. So we'll see what happens. It looks like it's going to be approaching this breakout area again, and we'll see if the delta supports it. These numbers will start, these red areas will start lifting off. You won't see them, it'll all flip green, giving the green light to push through. So use your software, use your tools, and good luck in trading, and let's make some money today as this crude oil goes back up to the $50 area. And here are the times to get into the market. Sometimes it's better just to trade the larger candle and enjoy the runs. So look for your pullbacks, look forward to them, because that's when we can have our coffee, sit back, relax, and just wait for that next signal, because that's the time to engage the market for the longest trading opportunity. All right, y'all have a good one, and we will talk at you soon. Thank you so much, and I apologize for the lesson, the trading lesson. It's if for those of you who are professional traders, you obviously know all of this. Thank you so much.